Good morning, everyone, and good afternoon to some of you. Hello, and welcome to the Charter Cities Institute's quarterly digital roundtable. These digital roundtables seek to promote conversation and provide introductions among relevant stakeholders who are engaged in some facet of city development in Africa, including but not limited to investing, building, hosting, and governing. Today, we have the World Bank's Multilateral Investment Guarantee Agency, or MIGA. We'll start with a round of introductions. I am Carl Peterson, the Senior Manager for Special Projects at the Charter Cities Institute. So when I call your name, just go ahead and please give a quick intro as to who you are. So we'll go ahead and start, of course, with Nabil.
Oh, good afternoon, good morning, and good evening, wherever you are. My name is Nabil Fawaz. I am the Sector Manager and Global Head for the Manufacturing, Agribusiness, and Services industries on the Operations Group at the Multilateral Investment Guarantee Agency. I am based in Washington, D.C., and I have oversight of the operations in these sectors globally. I am very happy to be here and to be able to present to you MIGA and explore possibilities of support and how we can be of assistance for some of the investors to secure some of the financing and mobilize other investors along with them in these projects. Thank you very much. I'm looking forward to the session.
Awesome. Thank you. Curtis.
Yeah. Hi, everyone. Morning here in DC, or good afternoon wherever you are. I'm Curtis Lockhart, so I'm Executive Director of the Charter Cities Institute. I've been in this position now for over 2 years, and before that, I was leading CCI's research team. So I've been at CCI now coming up on 5 years. I met with Nabil's colleague last year, at the end of last year in London at a African finance conference. She was speaking about MIGA's various products, and I think they'll be of a lot of relevance to some of our new city projects and urban development. So we organized this, and I think it'll be a really insightful session. So I'm excited, and thank you to Nabil for coming and providing this information today.
Awesome. Jaidi.
Hey everyone, Jaidi Chida with the Charter Cities Institute. I'm a Special Projects Associate. Great to be here.
Great. Kirk.
Yeah, I'm Kirk. Kirk at North Carolina with the Maroon Associates, and we're very interested in the discussion regarding banking and any form of charter city projects, as we have been pursuing opportunities in Africa as well. Thank you very much.
Thank you. Ingrid.
Hello, everyone. I'm Ingrid from Sweden, and I work as a project manager with Kirk, mainly into buildings and building society, not about the farming that we also do. Okay.
Awesome. Valentin.
Hi, I'm Valentine Senga. I'm a head of operations with Maluku Preserve City, currently in Johannesburg, South Africa. Glad to be around the roundtable. Thank you.
Thank you. Angelo.
Hello, good morning, everyone. I'm Angelo Charti Mwimbia. I'm the promoter and the founder of Real Estate Africa IMO SARL, and I'm here for the Maluku Preserve City project in the DRC, Kinshasa.
Thank you. Arjun.
Hi, folks. I'm Arjun. I lead business development at Realm Alliance. We're building a tech-enabled private security company in Africa, currently securing sites, mining sites in Burkina Faso, Mozambique, Zambia, and soon the DRC as well. Thank you.
Dr. Chris Brooks.
Good morning from Minneapolis, Minnesota, everybody. My name is Dr. Chris Brooks, and I'm an investor, founding partner at Brown Venture Group. We invest in tech, and I am passionate about this project.
Elton.
Hi, everyone. Good afternoon. My name is Elton. I'm an investment project manager at Two Lions, currently working on the project Alpha Cities. Glad to be here.
Thank you. Franklin.
Hi, my name is Franklin Amo. I am the managing partner of Bayless Emerging Markets. We're involved with three different, I guess, charter city-esque projects in Nigeria. Thank you.
Thank you. Joy.
Hi, everyone. Good afternoon. So my name is Joy, currently in Lagos, Nigeria. I work with Two Lions. I'm part of the fundraising team, working on some projects, to Lambda and Alpha City. Thank you.
Thank you. Muriel.
Hi, I'm Muriel here, real estate investor in the DMV, and I have partnered with Angelo for the Maluku Preserve city right now. Hello, everyone, and afternoon for those who are away from here.
Awesome. Thank you. Oliver.
Good morning and good afternoon. I'm Oliver Sharper. I'm a planning principal at Gensler. We're a global firm that is concerned with planning and design of cities, new and existing, as well as architecture. Thanks for having me this morning.
Thank you. Robert.
Hi, everybody. My name is Robert Ward. I work as a project manager for Savo project developers based out of the UK. We develop various different types of businesses across Africa, with a core focus being on real estate development projects, mixed use developments, as well as doing quite a lot of work in helping conservation entities to sort of diversify their businesses. Great to be here.
Awesome. Thank you. Shane.
Hey, everyone. My name is Shane Tragathon. I'm with Re-Element Technologies. We have a new technology that's low environmental impact, and we are deploying the technology to process critical minerals in Africa to try and help African countries capture the resources that they have. We currently have projects starting up in Ghana, Nigeria, Rwanda, and Zambia, and we're also in a fundraising process as well. Looking forward to the call today. Thanks.
Awesome. Thank you. Vivek.
Good morning and good afternoon. Vivek Mittal. I run Africa Infrastructure Development Association. We represent developers, infrastructure funds, DFIs, MDBs active across the African continent, and very enthusiastic partners to CCI in getting new cities up and away in Africa.
Thank you. Jeff Mason.
Good morning, everyone. I'm Jeffrey Mason. I'm CCI's head of research. Thank you for coming.
Thanks, Jeff. Is there anyone that I've missed? Looks like the answer is no. Nabil, I'll turn it over to you.
Great, thanks, Carl, and hello everyone again. And really, thank you very much for the opportunity, to present to me, to be able to present to you a little bit of an overview of a little-known institution of the World Bank Group that I think may have an impact and would be able to be of assistance, hopefully, for you to bring projects, that you were sitting on the sidelines, you were concerned to proceed with them, or to try to convince other investors that are willing to look into the project to step in and co-invest with you. So I will be giving you a little bit of an overview today about MIGA. I think I have around 20 minutes or so, and then we can definitely open it up later for questions, and I will be very happy to answer any clarification and more of questions that you have. I will also share the presentation with Carl later, that in case you would like to have it directly. So just very briefly to explain a little bit. I mean, everybody hears about the World Bank and they think about this very large organization, the World Bank, and they are dealing mainly with governments. And that is true. So basically, the World Bank is constituted actually of four institutions. The one that you have on the left side are really the core World Bank group. These are the one that are referred to as the World Bank, and their role is basically to support governments through their financing as well as technical assistance and policy advice to these governments. And their clients basically are governments. They do not talk to private sector. Their main clients are the governments, and they are there to support governments in through loans and programs to bring in development to these countries. But later on, after the creation of the World Bank in 1945, there was also a feeling that the private sector has a big role to play also in the development of emerging economies. So they have created the IFC, the International Finance Corporation, in 1956, which was aimed to support private sector investments. And the way they do that is by bringing in private sector alongside themselves in a project in a developing country and try to bring in the developmental impacts by financing these projects and catalyzing financing by their own presence there into these projects. But they also provide technical assistance and advisory work for governments that are, for example, looking to privatize certain sectors or certain industries and would like to bring in the private sector. And then comes MIGA. We are in theory the youngest member of the World Bank Group. We were created in 1988, and we have started operation in 1992. And MIGA basically was created as a complement, if you'd like, to the IFC, where the role of it is to support also in promoting foreign direct investments into emerging markets. The difference that the way they do it is slightly different than IFC. While IFC puts its money and provide advisory services, in the case of MIGA, we have investors that have identified an economic opportunity. They would like to move forward with the project. However, they are concerned about certain risks in the country, being an emerging markets or a country where they haven't invested in the past. They are not willing to proceed. And MIGA is there to provide certain guarantees against what we call non-commercial risks or political risks that an investor may face in a country, and provide them the comfort level to themselves as well as to their co-financiers to proceed with that project and bring in the developmental impact that we think the project would have in that country. So we do have two real products, the political risk insurance product and the credit enhancement product. I will be today more talking about the political risk insurance product, and I can briefly provide also an overview of what the credit enhancement is. Just to let you know that we are sector agnostic. That means MIGA does support sectors and industries across the spectrum, really, and this can provide you, some of the sectors that you are operating in. But importantly, it is better to go on the exclusion ones versus what are all the sectors that you can participate. So basically, the ones that you cannot participate are the vice sectors, for example, gambling, casinos, hard liquor. We can do soft liquor, beer and wine, for example, but we cannot do the hard liquor, and we cannot do nuclear, energy or of that sort. Firearms and armaments are also other industries that we cannot enter. Our priority here, as you can see, is really the IDA country. IDA countries are really World Bank Group member countries where the per capita income is less than $1,000 per capita in there, and they benefit from basically the World Bank support on a very long-term basis at very cheap rate. But also our also support is not only for IDA countries, but also for fragile and conflict states that are running into conflicts. And we are also now with the climate changes, we are definitely pushing a lot on climate mitigation, adaptation, and climate finance type of projects. However, again, I would like to repeat, we are not only focused on these type of sectors or industry or areas. We are open to all member countries that are a member of MIGA, and we can support any investors from any member country going to another member country for MIGA. This is a little bit on our portfolio, and this is just to show that we are fairly substantial, large institution. That means we can undertake risks at high amounts. Today we have approximately an exposure of $28 billion. Out of which 6.4 is our net exposure. And by net exposure, what I mean, this is what MIGA has on its book, and the rest is actually reinsured through the private market that they come behind us in these markets. Importantly to know also from an investor's perspective, whoever is behind us in the reinsurance market is behind us, but from an investor's perspective, you would have a MIGA policy, MIGA terms, and MIGA loss determination. And we also take the credit risk of whoever is coming behind us in these projects. So the idea there is just to spread the risks and to try to maximize our impact by trying to have a greater reach, frankly. You can find here the breakdown by regions. The main regions, the three regions are equally almost spread out between Sub-Saharan Africa, Latin America, as well as Europe and Central Asia are the main three regions where we are really heavily involved. But again, we are operational in all member countries that we can step in. As you may guess also from on the right side that really by sectors, the sectors that are heaviest for us are the extractive industries and the finance and capital markets, as well as infrastructure. For two reasons versus the manufacturing, agribusiness and services, which is the sector that I do represent. On the energy extractive industry, infrastructure and finance capital markets, most of the investors are usually the lenders that are concerned about the political risks. They are financing projects in emerging markets. And as you know, financiers and especially bankers or commercial banks, they like the belt and suspenders in terms of security. And therefore, having a political risk insurance is an added security from their side, and they can push for it onto the investors if they wish to finance the project. While on the manufacturing agribusiness services side, on my side, for example, I face more the equity investors that are usually the project sponsors, and the project sponsors usually have a higher threshold for the risks in the country. They are more familiar with the country. They are more, accepting the risks there, and they know how to maneuver. But again, even on the mass sector, which is manufacturing, agribusiness, and services, even though the sponsor may be feeling comfortable, it may be a technical partner that may feel uncomfortable. It could be a commercial lender that may feel uncomfortable. And we can play a role in assisting the sponsor in mobilizing this financing from these reluctant investors that may be sitting on the sideline because of perceived risks in the country. If I can go, so really in a nutshell, the risks that MIGA cover or provide guarantees against are four types of risks. Investors usually, when they're moving in an emerging market or a new market from their point of view, one of the main risks that they are concerned about is the ability to repatriate their dividends or to transfer their money so they can pay back a lender into the project. So MIGA does provide the cover against the inability to convert your local currency earnings or transfer these currency outside of the country. Now, this also can be a problem because sometimes you may have a project that is an export-oriented project and you're realizing foreign exchange, but you may have a law that will push you into bringing back the foreign exchange into the country, and they will allow you to transfer it back. And many investors are concerned that this money could be then expropriated or kept in the country, and we can cover against such an event. One important element that I would like to bring up here that also investors do ask about, the currency depreciation and currency devaluation. Unfortunately, in a case of currency devaluation or depreciation, MIGA does not cover that risk. That risk need to be hedged in the market through commercial banks. So unfortunately we can only cover also the recognized exchange market in the country. That means we do not also go to the parallel market or the black market in a way to compensate a loss. The second risk that MIGA cover is expropriation. So this is basically cover the risk of nationalization, confiscation of the assets from the investor. But not only in direct expropriation or nationalization. Sometimes you are realizing that the government, they can take what we call creeping expropriation. So they may take a series of steps that each by itself may not be expropriatory, but when you put them together, they are tantamount to an expropriation, trying to drive the investor outside of the project or outside of the country. Some of these creeping expropriation measures are, they can take away your operating license, for example. So you have the asset, but you can no longer operate the asset. They may, for example, impose a discriminatory tax on the project. And that discriminatory tax will cause basically losses to the investors in a way that they can no longer financially sustain that project. In certain cases, for example, you may enter with a government as a joint venture partner in a PPP, public-private partnership project, and the government the government may be the joint venture partner and may ask for more management control, more board membership, even though they are a minority shareholders, in a way to wrestle control of the project enterprise. And now that I talked about the private-public partnership also, which I believe many of you, especially in developing cities and the construction industry, one of your main concern would be in this public-private partnership. And for you, the concern also may be the ability of the government to honor the contractual obligations that they have entered into with yourselves to develop these projects. So MIGA also cover at the bottom here what we call the breach of contract. And the breach of contract is basically the failure of the government to honor its obligations under that contractual agreement that they have done with the sponsor. And also important to highlight for us how the breach of contract works, that the breach of contracts, the way it works, is not only the government takes action against the project or reneges on certain commitments that they have under this agreement, but really it is for us the idea that when that event takes place and that there is a dispute resolution mechanism in the underlying agreement, we require the investor to seek to go under the dispute resolution mechanism, which is an arbitration most of the time, and undergo the arbitration. When the arbitrator finds that the government was at fault and assign an arbitral award to the investors, and the government reneges on that arbitral award and refuses to compensate it, for us that default is actually the breach of contract that MIGA will compensate. And last but not least, the fourth type of risk that MIGA cover under the political risk insurance is the political violence or the war and civil disturbance, where MIGA will compensate any damage to the assets that may take place because of a war and civil disturbance event, where we enter and we compensate either to the repair or the replacement of the damaged assets. It is also important to highlight that under war civil disturbance, MIGA covers also the risk of sabotage, terrorism, as well as coup d'etat, wars among countries. And also we cover what we call a business a walkaway situation. That means this is the case, or business abandonment. This is the case where the country has entered into civil war. You may be operating an asset in that country, but you became too concerned about the risks that became too dangerous that you decided to exit the project and exit the country and leave the assets behind. We call this business abandonment, and we can cover it under war and civil disturbance expropriation, the war civil disturbance. And actually, the compensation for it will be similar to the compensation that we undertake under the expropriation cover. Also, for an add-on, we are willing to also provide what we call under war and civil disturbance, what we call temporary business interruption. This is the case where you may have an asset that is operational, that is worse of a disturbance has taken place in the country, but the asset is still intact. There was no damage to it, but it was no longer safe for the employees to come to the plant. You were an export-oriented company, and the port has closed, so you can no longer export your production. You are relying on critical imports for the operations of your business, and therefore you can no longer undertake it. So your business is completely stopped. And if it's completely stopped for a period of, for MIGA currently up to 30 days, continuous days, MIGA could compensate the fixed operating cost that the investors will incur during this period of stoppage. You still have to pay the rent, you still have to pay the employees, you may still have to pay the utility bills, to keep the machine humming. So there are certain costs, fixed costs that will keep going, and MIGA can step in and compensate also these losses up to 1 year of stoppage. In certain cases, we are also willing to look in what we call loss of revenue. We can look at what could you have sold during that period of time, and we can compensate that lost revenue based on historical performance in the country and in the project. Finally, one important element about these 4 risks. These 4 risks are offered a la carte. That means you may enter into a country, you may go into West Africa, the UMOA, there's the currency there, the CFA currency is unified, is backed by the French Treasury. You may feel that, look, I am not worried in Côte d'Ivoire about the risk of currency transfer or convertibility. However, during elections in Côte d'Ivoire, sometimes there are violence. I am worried about war civil disturbance, or I am entering into a PPP project with the government, and it's over a long tenure of 15 years or 20 years. I'm concerned about the governments respecting this contractual obligation over that long tenure. And you may say, I would like a breach of contract, war civil disturbance, and I can cover you for 1, 2, 3, or 4 risks. So it really depends on your perception and what yourselves or your financiers are interested in, and MIGA could tailor that cover to your needs. If I can go quickly also on some of the key parameters of MIGA. As I mentioned, we have currently now 182 member countries, so we can support any money coming from any member countries to any emerging member countries or developing member countries. That means I cannot, for example, insure projects in Europe and US and Australia, but I can only go into emerging market and developing countries. But any money coming from the developed countries into the emerging markets, for me, will qualify for cover. Now, it is important here, you can say we can cover all or some foreign investors in a project. Many projects could be financed locally. Unfortunately, MIGA has been created to encourage cross-border financing and provide foreign direct investment into a country under the premise that we will encourage, foreign technology, technical partner that can come in and can create value added into the country and technology transfer and skill transfer into the country. So we were very much focused only on covering cross-border financing. I cannot cover local financing, but I can, for example, you may be financing a project with local loans, but foreign loans. The local loans will not qualify, for example, for a MIGA guarantee, but what can qualify is the foreign financing that is coming into the country. And sometimes it could be a local investor that is financing a project locally, but is using a foreign asset that they have in a different country to finance that project. And for that case, I can also insure it because in this case, I'm trying to make the case for the government that I am trying to reduce capital flight, and I'm encouraging capital repatriation into the country. We do collaborate with all DFIs, including our sister institution at the IFC and the World Bank directly. Now, an important element that you would like to know is that on the coverage, the percentage that we can cover. In the case of debt, we can cover up to 95% of the principal and the interest of that debt. And in the case of equity, we can cover up to 90% of the equity contribution and unlimited amount of future retained earnings. So that means you may be putting, for example, an investment of $10 million in a project, and you think that this $10 million will become over the next 5 years 20 million because you will be generating income, and these earnings that you'll be generating, you will be plowing them back into the project so you can grow the project and expand it. And we can, at the get-go, provide you a policy, let's say, for the $20 million, and say 10 million is your current exposure, because that's how much money you put today. And the 10 million, an extra 10 million will be put on a line which we call standby, which is almost like a commitment line, where we give a commitment to provide you this $10 million when you realize these earnings and plow them, put them back into the project. Which also brings me on the premium here. For example, our premium are payable on the case of equity, it's payable on a yearly basis. And for the case of debt, it is payable on semi-annual basis to match the debt repayment. And therefore, as your debt is being repaid and is dropping in exposure, your premium outstanding will also drop because your exposure is dropping in this case. The one important element is also the tenors that I was mentioning. I mean, what separates us also from the private sector is these tenors. We can go up to, automatically, we can provide cover for up to 15 years. And in certain cases, we can go up to 20 years. One very important element of MIGA is policies. Once we enter into a policy, we are locked into the policy terms and condition for the entire period. So MIGA cannot exit a policy no matter what happens in the country. So if the risks has deteriorated in the country to the point we can no longer issue a new policy, if I have issued a policy to yourselves, then that policy would remain in force and under the exact same terms and condition as when we issued it. Even though I am closed in the country, I may not offer new policies, but I would remain under the exact same exposure and terms that I have. And while MIGA cannot cancel the policy itself, other than for reason of violation of the covenants, and the covenants that MIGA asks for in the contracts are usually related to the environmental and social safeguards and guidelines, as well as no child labor, no forced labor, the basically environmental and social guidelines that we have. No, we don't impose any financial covenants on the investors, for examples. While MIGA cannot cancel the policy, yourselves as investors, you can cancel the policy anytime you wish after the 3rd anniversary. And why after the 3rd anniversary? Because when MIGA was created, we were created to encourage long-term investments. And what we consider long-term investment is a minimum of 3 years of a commitment into a country. So however, if the project fails before the 3rd anniversary and you decide to cancel the policy, we will definitely, we will allow the cancellation. If you decided that you no longer feel the risks after the 2nd year, for example, and you decided to cancel the policy, we do impose a penalty fee, which is equivalent to 50% of the premium owed up to year 3. Of the policy. But after the 3rd anniversary, you can cancel at any time without any penalty imposed at that point in time. One other very important element for MIGA's policies, and in your case, especially that they are very long term, first, they provide you that comfort level on a very long term. So you know that your policy will not change, your premium would remain the same, the scope of the cover will remain the same, so you can sleep hopefully well at night, knowing that that policy would remain in place and there is no changes for it in the future. But also you can use it to your advantage. In case you decided to divest from the project, our policies are transferable and assignable. So you can use it as an asset when you are selling the asset that you have, by saying that in case you are concerned about some commercial and non-commercial risk in the country, I have this policy from MIGA that I can transfer you the new buyer, subject to MIGA doing the review of the buyer's experience, doing the KYC. And importantly on the assignment is in case you would like to use it as a collateral, let's say I insured your equity and you are borrowing from a lender and the lender is asking again for the belt and suspenders as security, and you may decide that, look, I have this MIGA policy that if I get compensated by this MIGA policy for an event that is covered, the payment, I can assign you the payment to the lenders if I still have an outstanding payment. And that assignment of proceeds, we can also enter into it as a tripartite agreement. Now, the type of financing that MIGA can do are we can cover equity investors as well as shareholder loans and commercial debt. So we can cover, the loans and swaps and other debt instruments. For example, a loan guarantee that you may have. Sometimes you may borrow to finance a project, let's say in Africa, and the government and the lender could be European lender that says, look, I am willing to finance you in Africa, but I would like a loan guarantee from your corporate in Europe that if something happens in Africa, Europe, I have access to Europe headquarters and I can get paid from there. And you can come to MIGA and say, I have this loan guarantee to the bank that has financed me for this project in Africa that I would like to cover against these risks. And if that risks materializes and causes the default on the loan, and then the lenders call on the guarantee, and you make payment on that guarantee, you can then come to MIGA and say, look, I had to honor that guarantee because of a political event that took place, and I would like to be compensated. And MIGA could look at that compensation also to refund you the money that you had, the loss that you incurred in that loan guarantee. We can also, importantly, especially that you're in the could be in the housing markets, and in certain cases you are not only constructing a property, but you're also operating and managing it. So you may be leasing an office buildings, you may be managing this property or a hotel. And MIGA could cover not only the asset itself and your equity investment in the asset itself, but we can cover also the operation and maintenance contract, the management contract, services contract that you may have to that project. And against, government interference, again, non-payment and other, dispute that may happen due to performance on that front. Sorry, just to make sure. Sorry, my screen froze just to push. I'm pushing on the 1 second. Once, hopefully that I will unfreeze soon. Whoa, yes. So now what separates us from the private market is the slides. Very much. I mean, basically, the first thing that separates from the private market is the tenor that we can take. As I mentioned, we can go 15 and 20 years, and I can give as low as 2-3 years. I can even give a cover for up to 1 year, provided there is an equity investment that proves that there is a long-term commitment by the investors into the project. But also the most important element of MIGA is really its deterrence and mediation efforts. And by deterrence, because we are a World Bank institution, when I'm covering you as an investor, I'm covering you against one of my shareholders. These governments are shareholders of our institution. They have contributed to our capital, and they have paid up to the shares, and they have signed up to our convention that basically states what we are covering, how we operate, and that we have the right to recovery from the governments if they take action that will cause a loss. And by deterrence, that means because we are a World Bank institution, and there is not only MIGA itself, but there is the World Bank, there is IFC, there is IDA that may be financing transactions into the country. The country usually have a relationship at stake with the World Bank, and they have a much bigger pie that is in the country in terms of financing for multiple projects. So they try to keep all projects that are with the World Bank or being financed with World Bank institution to try to keep them on track and avoid any adverse impact, so it will not impact other projects that may be financing or seeking financing for. And more importantly, if the deterrence impact does not work, MIGA's role is really the mediation services. So when you are facing a problem, let us say in the breach of contract of a PPP, or you are unable to transfer money or to convert funds into foreign exchange, we ask under the contract of guarantee to please inform us as soon as these events take place that may lead to a loss, so we can kick in gear our own intervention with the government and reach out to these governments and try to understand what are the issues that are at hand. And we hope through this intervention that the government realize that the World Bank and MIGA is involved in this transaction and try to find an amicable solution between the investors and themselves to keep the project on track and moving, and also avoiding the investors from sustaining a loss and moving outside of the country and leaving an asset behind at that point in time. And the other element that if MIGA will end up compensating a loss, we do have a right through our convention to seek a recovery from the government for the loss that they may have caused. So in very much MIGA acts as an honest broker. So we try to mediate. I mean, we do not mediate. We do not go and ask the government for certain, changes in the contract. We leave it between the investors and the government to find an amicable solution. And an amicable solution it should be. That means MIGA we will not tell you, oh, the government has offered you a great deal, why don't you take it? It is up to you to decide this is an acceptable deal and I'm willing to negotiate these changes, or no, these changes are unacceptable to me. I have a loss. I am compensated by, I have MIGA insurance. I would like to be compensated. And at that point in time, MIGA will step in and will compensate that loss. And by way of track record, just to say, I mean, over the past 32 years that we have been in existence, we have insured over 1,000 projects that for over $60 billion. And we have faced over 200 potential, what we call pre-claims. That means where the government has taken action against the project and that would have caused the loss, and MIGA has intervened in this project, and we have succeeded in over 189 times in these projects to save the investments and to keep the investors going in that project, realize their future earnings, and maintain the developmental impact that we foreseen for the project, for the country. And yet we have had only 11 claims. By the 11 claims and 11 losses that we have compensated, it is important to highlight 9 out of these 11 losses that we compensated were losses that were due to war civil disturbance events. So it's an event that I could not stop, I could not intervene. You know, there was riots, the asset was at the wrong place at the wrong time, they got ransacked, we had loss of assets, damage to the asset, and MIGA stepped in and compensated those losses. Yet in only of the 11, 2 were against expropriation, where the investors got expropriated and MIGA stepped in and compensated those expropriation cases. Now again on the value added for the PPP, which I believe, you know, in the construction industry and housing, cities construction, PPP may be of interest. We hope that we can enhance the bankability of these projects for the country. And by enhancing the bankability, that means hopefully with MIGA being there, the lender that is willing to come and finance the project is willing to extend the tenor beyond a certain amount of years that they wanted to give themselves or feel comfortable with, because they know that MIGA is willing to be there and support them either to resolve the problems or to compensate the loss. Hopefully also that they will improve also the premium, the interest that they are charging on these loans or the financing cost, because initially they are taking these risks into consideration and they are assigning a certain value to it that they are charging the investors. And when MIGA comes in, hopefully they would remove this value as it is being transferred to MIGA in this case. It is important, I believe, as I mentioned earlier, that breach of contract is I believe, is the most important cover for the PPP program, because you're entering in partnership with the government and you're concerned today's government is honoring its agreement and are the one that developed that program to which you won and you entered to. Your concern may be the future government that may be coming and may have doubts about that project and may want to renegotiate the terms that have been offered initially. And MIGA is there to support, the government to stay to honor basically its obligation. Last but not least is also the access to World Bank expertise. And what I mean by World Bank Group expertise, that every project that we are undertaking, we do also connect with our World Bank colleagues and try to understand if the project falls within the advice that they are providing to government, within the program that they are doing with governments. If it is falling within it, that's we make sure that it is in good shape for that program, that they're in line with the program that they are covering. And if it is not, and they say, no, look, this project is not really is against to what we are trying to guide the government to do, then that may stop us from supporting it. But also it is a red flag from your side that there is this World Bank organization that is trying to change the rule of the game or changing the terms that you are agreeing to in a way that may cause a loss in the future. And you may want to think, should I reconsider it? Because maybe the World Bank will manage to convince the government of these new rules or regulation at the time. If I know that I'm a bit moving. I will, a bit slow, but I will move you a little bit of the examples. These are some of our clients with whom we have been operating and working. Here, I just wanted to provide. This is a PPP example. This was a hospital construction in Turkey, where we supported Samsung of Korea. For its equity investments in the construction and operation of a healthcare facility in Gaziantep in Turkey. The PPP contract was for 25 years, and MIGA stepped in to cover the equity investment of Samsung into the project, which was 54 million, against the risk of breach of contract, war civil disturbance, as well as foreign, currency inconvertibility and transfer restriction. So all four covers were provided to the equity holder in this case, and basically, we provided a tenure for 20 years. So we gave the comfort level to the investors to move forward with these projects and develop it over the long term. And since then, we have also had the new equity investors that have replaced the Italian investors that came in, where MIGA replaced the Italian investors, and we covered the new investors that came from Luxembourg in that same project. But one of the project I wanted to show you, which is a second hospital in Turkey, this you can see it's a bit of a spaghetti, with all these arrows. But where I wanted to bring, it is exactly the same type of project. It was also development of a PPP hospital in Turkey. The difference, though, in this one, that we raised the bond to finance the project. In raising the bond, what MIGA did, we covered the breach of contract risks, and the EBRD, the European Bank of Reconstruction, came into the project and provided also a reserve support facility to step in. What this has helped is, and then we went to the rating agency to rate the bond. And what has happened, because of MIGA breach of contract cover and the reserve support facility, revenue support facility that the EBRD has provided, then the rating agency has provided an investment grade to this bond. And basically, it was at the time when we issued it in 2016, it was 2 notches above the sovereign rating. And today, because of the deterioration of the economy in Turkey, we are around 6 notches above the sovereign rating, and the bond has maintained its investment grade. And where MIGA, where the EBRD has entered, because I was mentioning there was a breach of contract. The breach of contract, the way we go is that we have to go to arbitration. Arbitration many times can take a long period. This revenue support facility was to step in during the arbitration period and make payments on this bond during the arbitration period. So it can keep the bondholders whole during that entire period until the finalization of the arbitration. And that's why that combination has provided the comfort level and for the rating agencies by Moody's to rate the project as an investment grade. I will not. It was that was a simple project where again it was Dole of Asia that was investing in Sierra Leone in a new project to grow pineapple and diversify the sources of pineapples from Asia to Africa. Also, in case there are issues in Asia, they can have sources out of Africa, and they have identified Sierra Leone as a country where they can develop it. And MIGA stepped in also to cover their equity investments into Sierra Leone for these projects. And the breach of contract here in this agriculture project was the availability of water and the availability of the land, because sometimes you may enter into lease agreement with the government to lease the land on which you may construct or you may put your asset, and that lease agreement may be breached, and MIGA could cover those breaches. So I will not go more than that because I wanted to leave you some time for Q&A, but I would stop here if you don't mind on my side, because I just want to avoid lingering.
Yeah, thank you, Nabil. I know if you have a couple more minutes you want to finish, that's fine. We're scheduled for about 20 more minutes ish till 15 past the hour. So if there's something else you want to get to, that's okay. And if not, we're happy to open the floor for questions.
Very good. Then let me, the quick one, what I wanted to mention here, the first one on the dole is what I wanted to mention, that we can also operate with other bilateral institutions. In this case, we have operators with NEXI. NEXI is like the export institution, and import bank of Japan. That also was providing guarantees, and they came behind us also as a reinsurer into that project. And we did work in this case, for example, in Ethiopia, where we have supported an investor out of Mauritius for its investments in agriculture also in Ethiopia and in manufacturing. What has happened in this case, there was a bilateral institution from France, Proparco, that have financed the project in Mauritius. And the Mauritius investors have advanced the money to the project enterprise as a shareholder debt. We have covered the shareholder debt, but also we have covered the loan guarantee that they have provided Proparco of France against political risks if anything happens. So what I'm trying to say that some of these bilateral institutions, even though they are development finance institutions themselves, sometimes in certain countries, they are also requiring political risks, and MIGA could step in and also ensure these bilateral institutions. Here, this is Casada project. It's an interesting project that is a private, a private equity fund that was constructing and acquiring hotel properties to turn them around and to renovate them and to reoperate them at a higher efficiency and a better operational mode, if you like. So, but what we did in this case, as a private equity fund, they came to MIGA and they said, look, we are investing in these 12 countries. We would like MIGA policy for our projects that we are moving forward in. We don't know all the transactions yet, but what MIGA did, we provided them an umbrella policy. We call it a master contract, that we told them, okay, we are going to provide you $300 million in capacity for insurance in the projects that you are undertaking in these countries. And then we agreed on the parameters of the covers. We offered them our commitment for these future projects on the hope, and not on the hope, but also to review every project that comes along. And what we did is that for the following 3 years, as Casada was acquiring properties, we were reviewing each one of these projects. We were, and issuing a policy from these $300 million that we have committed to them for each one of these projects. So the benefit for Casada was that with MIGA's policy being in place, they have managed to raise further funding into the fund by saying to the other LPs, the GPs, that look, MIGA is willing to come with us. They will be insuring our projects, so that gave them comfort level for these investors to move forward with them. And the benefit also for Casada was in this case that they had us committed for the next 3 years on all these projects. As of today, actually, we have insured around 16 projects for Casada under this facility. This is the same thing, but it was for an agricultural project for Chayton Africa, which was a PE fund where Norfund of Norway was an investors, and where we have covered their multiple projects also in Southern Africa in the agriculture space. And also in Zambia, one of the risks that we covered was the breach of contract, and the breach of contract there was also for water availability to the projects. And I would like to take you now through the process, if I have just one more minute, which was, sorry, I'm having a frozen.
I think it'll unfreeze in a second here.
Yeah,
Nabil,
no problem.
take us through the process.
Yeah,
and then
exactly. So the process, this is the process, very simple from our side. We are really one phone call away and an email away for any inquiry to tell us, can you do it? This is what I'm thinking of doing. How can we structure it for MIGA to be in? Now, the process is very simple. We start with a preliminary application that you can find online. It gives us the basics of the projects. It is a project in, Côte d'Ivoire, building, a mall. It's going to be for 10 years. We're going to put 100 million, 20 million in equity, 80 million in debt. And we are investing from France to Côte d'Ivoire. And that will allow me to determine the eligibility. This is in a sector that MIGA can cover. It is the amount that MIGA can undertake. It is an investor in a country that is a member of MIGA. The risks that we can cover are something that we can do. It allows me to register the project and to inform you that, yes, we are interested in looking at it. And from that point, I can also try to issue, I can issue also what I call a premium non-binding indication. So I can tell you, based on these parameters that you are providing here, I can tell you that's how much it would cost an insurance policy for you in that country for this project. If you are interested to pursue it further and you would like MIGA to really provide the contract of guarantee, then we ask for a definitive application, which is a more involved application, where we ask information really as much as what the lenders may ask you or as your financiers are asking you. And we ask you just to share with us this feasibility study, business plan, financial forecast. If it's an equity, the shareholder agreement, if you are buying shares, the share purchase agreement, if you are having a debt, to see the draft term sheet or the loan agreement, to see the agreements that we are going to be subrogated to. Because once we compensate your losses, we will take your spot, we will compensate you, and then we take over, we get subrogated to your rights to pursue these governments for the recovery. And therefore, we need to look at these agreements to know what will be our status once we step into your rights. Once you send us the definitive application, basically our approval process is 3 steps. We go to what we call the initial screening meeting. So it is like a concept note that we present to our project risk committee, tell them this is the project, this is the amount, this is the risks, that's why we think we should do it, these are the developmental impact. And they can tell us, okay, you can go ahead, you have the green light. They can say, no, don't do it, it is highly risky, we don't like for whatever reason, and we will tell you what it is. Or they may say, yes, please go ahead, but please make sure that the A, B, and C are being taken care of, and they are making sure that these areas are being managed well. So we can come back to you, and the idea after the definitive application, we have this initial screening meeting within 6 weeks to try to come back to you fairly quickly to tell you, yes, we are on board, no, we are not. Yes, we are on board, but we're going to check further certain areas and to put you on notice what they will be. After the initial screening, we do go to our full due diligence underwriting, if you'd like, where we analyze the project's developmental impacts. We look at the environmental impacts and social impact assessment that was done. We do the integrity checks, as well as we review the project from an economic and financial viability. But we do not do a new review ourselves. We just corroborate what you have provided us. And if we have questions, we say, no, look, it looks like you were too optimistic on this financial forecast. Can you explain what were the criteria that you have used, or explain them, and we will go through Q&A throughout the process. Once we finalize this process, that usually take a month and a half to 2 months, we go to our second internal review meeting and present the project to our project review committee at that point in time, and tell them, we are coming back. We address these issues, and we move forward. If we get the approval at that point in time, we are 90% home free. That means we are already we have secured the approval, which is the most critical approval at that point in time. And we move to our board. At the board is pretty much concurrence. We would know way ahead of time if the project is within the board, approval parameters, if you like, or not, before we move forward. So we would know even at the initial screening meeting, we would know how far we are or if it's going to be a problem or not. If you can see on the right, you have host country approval and public disclosure. These are also internal issues that MIGA will undertake. The host country approval is important because we agreed in our convention that every time we are supporting a project, we do inform the government of our intention to step into that project and ensure that investors against certain non-commercial risks. And that is important because the government should give us the acknowledgement, say, yes, okay, no problem. And if they tell us, no, sorry, can do it, then we cannot do the project. But also, in my view, this is a red flag for the investors because they realize, the government is a member of this institution to encourage investors like us to move forward. And now they are refusing to give the approval for this guarantee. How come? What is in store for me in the future? So it should give you maybe a pause at that point in time. But if not, ourselves, we will not be able to move forward without it. Having said that, in the history of MIGA, I only can recall 2 times where government have said no to a project in the past. But most of the governments, they also do it on what we call absence of objection. That means we send them the letter. If we don't hear from them within 30 days, we send them another letter on the 40th day to tell them, as per our agreement, we haven't heard from you. We deem it as acceptance, and we are moving forward with the transaction. And this letter is important because in the future, when there is an issue with the government, and you tell me, look, they're not transferring the money, the first thing that I do is I send them that letter back with my email telling them that my investor is informing me there is an issue. Can you help me understand? And as you recall, 5 years ago, you have approved this host country approval letter, and you said, okay. So they realize, oh, we have been there. We know this MIGA is in the transaction. World Bank institution. Hopefully, we cease and desist of that adverse action. But they can also throw that piece of paper in the trash. And if they throw it in the trash, then what we do is we reach out to our colleagues on the ground, which are the World Bank colleagues, to go talk to the government and try to highlight the issues. And if that fails, then what MIGA does, we send our own lawyers and our team then to the country with the convention to remind them of the obligation and the issues that are at hand and to try to fix that problem. And last is the public disclosure. The public disclosure, because we are a development finance institution and in answer to civil society and NGOs, we do disclose on our website for every project the environmental and social impact that this project may have, in case, because many times you have been targeted that we are not doing enough work in mitigating certain environmental social impacts. So for these civil society and NGOs to look at the project we are undertaking, and if they have any questions, we are there to answer them and to say how we are managing these risks. However, the public disclosure is never done without your approval. That means anything that I will put on my website, which is usually the environmental and social impact assessment, will be done with your approval. So I cannot go to my public disclosure without the approval of the investors for me to go on a public disclosure. And the final thing, when we go to board, once we go to the board and we secure the approval, we are ready to sign the contract of guarantee the next day. Usually we do negotiate and discuss the contract of guarantee during the underwriting process, so to gain time and be ready for your financial close at the same time as you have yourself closing the financing. And last but not least, after we close the contract, after we sign the contract, we do have a monitoring and evaluation period, continuation, that as the project is evolving, we will keep monitoring, make sure that it is still respecting the ENS safeguards and guidelines, that we are looking at certain KPIs that we keep on asking for the investors to provide us on a yearly basis, employees that are being employed, how many women, how many male, how many, all these type of developmental impact that are important for us to track and to bring out, to highlight to our member countries when they ask us how we are moving with all these projects. So in a nutshell, this is the process. From the time you tell me I am interested in MIGA, let's please, like you put the definitive application to move forward, it takes us between 3 to 6 months to complete the transaction. If it takes me 3 months just between typing and presenting and clearing internally, and I'm giving 3 months additional, that in case the Q&A, clarification here and there, and we are following up with certain investors, lenders on certain elements that may delay the process. So that's why we say it may take us usually around 6 months. Just on the fees, the preliminary application is free, and everything is confidential that we treat, and we can sign also an NDA if you wish. But the definitive application do carry a fee. The fee is really minimal. It's $10,000. This fee is fully refundable. As soon as we sign the contract of guarantee, we deduct that fee from the first premium payment. Let us say you owed us $100,000 in premium, and we say, since we signed the contract, so you owe me now $90,000 because you paid $10,000 as a definitive application. And in certain cases, if the project requires outside consultant or for us to travel to the country and visit the project site, we do assign a processing fee that we will inform you after the initial screening meeting. After we get the initial approval and they say, okay, go ahead, do the due diligence, and we feel, the environmental social officer need to go visit it, or we need to go talk to the government or to bring in outside consultant, we will request a processing fee. Usually it's between $25,000 to $50,000. The amounts that we have expensed during the process would have been expensed, and the amount that is left over is fully refunded at the end of the process. And that's it on my side. Here it will go back again on the details of each one of the covers that I have in the presentation, but that I will share for you later. Thank you.
Awesome. Thank you so much, Nabil. We appreciate it. I would love to open the floor for questions now. So if you have a question, please use the raise hand function in Zoom so I can identify you. All right, Vivek, I'll have you go first.
Thank you very much. Excellent presentation there, Nabil. And for full disclosure, when I first availed the first, or actually took out the first MIGA guarantee in my career in '98. So I'm an all-time fan of MIGA and the World Bank. In terms of just the questions, I can ask quite a few questions, but I'll focus on a couple of things. Private to private, i.e., if you have, let's say, a supplier to a mining company, which is privately owned, or you're not covering power, but that's, it's fashionable for African power generators to be selling into the market. So there's no real tangible government angle over there. How does MIGA cover that, if at all? So
right.
that's one area. But please answer that and I'll ask you.
Sorry, thanks, Vivek. I mean, you're right. If your counterparty is fully private sector, then for me, if let's say you entered into mining industry, mining sector, mining project, and the mining project is buying power from your independent power production company, and they are not paying. But for me, if they are not doing that, now it's a commercial risk for me. I view it's private to private as a commercial risk. But if the government is interfering in that project, for me, basically my whole raison d'être, if you'd like, is to prevent government intervention, adverse government intervention in the project that may cause losses. So if the government is interfering in the project, then MIGA could step in. Like, let's say, yes, the mining company paid you, but you can no longer transfer your money outside of the country or convert it, then MIGA could step in and compensate that loss. But I do not compensate a loss that is caused by your commercial partner, in this case, if the private sector.
But if the mining company is being frustrated because of government action, so I mean, take the very real example. What to say? There is deterioration in the mining company's ability to pay because of lack of transport that the government's supposed to provide, or there's adverse regulation for the mining company from the government. Does that flow through?
It's for the mining company to seek my policy at that point in time, for it to go through to you. So
okay.
So that means I have to ensure the mining company investment against those risks of government interference.
I see. I see. So
Because you're a service provider to the mining company, and you're an independent service provider in this case. So for me, you are suffering from it because the company is suffering from intervention by the government. But for me to reach you, I need to start at the top, at the mining company level.
Okay, fair enough. And could you shed some light on your recent experience in Africa? So you said 11 claims made and paid.
Yes.
How much of that is in Africa over the last, since COVID? What has your assessment been? I suppose, it's fair to say that the perceived political currency risk has only increased in the last 4 years. But has there been an example of an improvement in Africa? A third question is around that is, Ethiopia has new laws for currency convertibility and FDI. In taking Ethiopia as an example, what do you feel about that?
Yeah, thanks. I mean, this is a very good question, Vivek. Actually, Africa, yes, the global risk has been increasing. So risk has been increasing globally. And what we are facing in Africa a lot in many countries is especially on the currency transfer and convertibility risk. So that has been one of the main issues that we are facing. I mean, you mentioned Ethiopia. Ethiopia is one of the main risks. One of the main risk in Ethiopia now is transfer restriction and convertibility. Nigeria is similar. I think Malawi the same. Egypt the same. So there are quite a few countries that are facing these currency and convertibility risks. Now, I have to admit that in these countries where the risk is too high, for example, let's say Nigeria, Ethiopia today, after Turaco, we have stopped providing the cover. So if the risk for us in the insurance industry, once a fire has started, it's very difficult to sell a fire insurance in this case. So we will not be able to provide the cover against transfer restriction and convertibility currently, but as soon as it opens up, we can step in and do that cover. Now, if you were with us before that risk has materialized and we have issued a policy, then the policy is in force for the entire period during these problems. Now, the way we are looking at it, we are feeling that the situation is moving positively. I mean, Ethiopia is trying to act new laws and is working with the IMF. So is Nigeria. So countries, and so is Egypt. So things are moving forward, and we're hoping that the risk profile of these countries will improve and will allow us to move into the country. Another important element to keep in mind on your side, that from initially when you would approach MIGA and you would like to talk about a project and you would like to know about the risk in the country, our risk assessment is not public. It's not public for a simple reason, because these governments are our shareholders. So the last thing we want is to have a fight with our shareholders about assessment. How do you assess my risk higher than my neighbor and all these things? So, well, we get into some very pickle situation. So, but what we are willing to do as an investor, we are willing to put you together with the economist that is reviewing the country risks and to explore and to discuss, if you wish, the country risks at the time that you have.
So just to push on a couple of points.
Vivek, I'm sorry, because we're short on time, I want to get some other questioners, but that's great, and I'll have you guys follow up with each other. Bradford, I think you're next.
Awesome, thank you. So there was a couple questions that I was curious about, but it's kind of very related. One is, can you cover risks for large, like mixed projects, like for example, like a city scale development where you might have like a port, a business center, maybe large agricultural operations, or do these things need to be covered individually? That's the first part.
Thanks, Brad. Basically, actually, we don't have a minimum and we don't have a maximum. So we have done insurance for as small as a couple of $1 million, $3-5 million. And we have done insurance for a project as large as $1.8 billion. Now, but we are project specific. So yes, we do look at the project itself. Now, if it is a very large development and we can either dissect it, or if it is all the development taking place and it's all investment through one vehicle, we can do the big development in one shot. But if you're doing, let's say, I'm doing the hotel, commercial real estate, commercial retail, and I'm going to do the port, and I'm worried about the port, then we can focus the insurance on the port element and the port operations, because probably it has its own investment plan, it has its own, company that you are putting together for the port operation. Similarly for the hotel, similarly for the mall or the commercial center. And we will impose, for example, our conditions on that hotel, on that mall, on that center or port. And we can, but if you are using one big investments that, look, we are developing a city and this is all the elements of the city, and you have, we can also cover the bigger picture, the whole project in one shot.
Okay, and then related to that is when we talk about breach of contract at that scale, at like a city scale, there's oftentimes two components to it. One being, some kind of a traditional concession contract, right, around the land and so on, which I think is more it's a straightforward commercial contract. But then the other piece of it is oftentimes in order to deliver on the project, you're enacting some kind of a zone law or tweaking the zone law in some way for the country, right? What we're finding in Africa is many countries either don't have a zone law or they have a completely outdated or non-competitive zone law. And so we're needing to take a lot of upfront risk to like re-architect the zone law with them and get that going through. And we've seen this, in some places around the world where the government, a later government will switch and try to rescind the zone law that applies, right? Which is effectively, it's equivalent to breach of contract, right? But it's complicated because these are separate matters and there's no overarching thing. I wanted to get your take on that.
Yeah, in this thanks, Brad. And in this case, we will not cover, for example, in this case, I will not cover, for example, the changes that you are undertaking with the government on the zoning law. But when MIGA enters, basically, I try to you entered into a project with these investment laws and this investment program in mind. What I'm trying to do, I'm trying to keep the government honest under its investment laws with the investors. So if you entered into a project where the zoning law was something, and that's based on that zoning law, you entered that project, or you managed to make them change it and you entered that project with that new law, and then subsequently a government came and changed that law and causing a loss, for me, that change of law could be is tantamount to an expropriation or a breach of contract loss.
Yeah. Right. So okay, good. So but we're working on a case like this right now. So I'm just thinking we probably want to say as much about that as possible in the concession agreement as well, right? We want to reference the zone law and changes to the zone law.
Yes, but while you are changing the zone law and advocating for it, I cannot cover what you're advocating for until it becomes law.
Right, until it becomes, yes, I completely get it. Okay, that's awesome. Thank you so much. Very helpful.
Awesome. Thank you, Bradford. I think we're kind of over time. We have time for one more question. Arjun, I'll let you ask your question and then we'll wrap up.
Sure thing. Nabil, thanks so much for the presentation. My question is, like, to what extent do you partner with companies that offer some sort of kind of risk reduction product or service to, like, sort of incorporate said product into policy so that, if clients were to sort of, use this product or service, they would like sort of pay a reduced premium. Would love more context on those sorts of partnerships.
Really, thanks, Arjun. For us, the only people that the only companies that enter into service with us are usually our reinsurers. That mean the people that are coming to reinsure our contractor to come in our syndication pool to give us the capacity of insuring these projects at the magnitude they want. If I'm understanding correctly, that means in case you are coming into if you are coming into the project, let's say, and providing certain security mechanism, certain risk mitigation mechanism, I would look at, when I'm analyzing the project, I would look at the services of your company, for example, or that are being contracted for this project, to say, look, this is reducing my reducing my risks. It's a risk mitigant, and then I can argue internally when I'm reviewing the project for a better risk on the project, and therefore the premium tend to be better because the risk has improved because of your company's services to that project enterprise. But not ourselves. We will not require it ourselves. We will not, push the services or say it's what you enter. We tell the investors what do you have, and we are willing to cover you the way you want it to be. So that means we avoid advising investors against certain securities and measures and all that for a simple reason is we don't want to be caught in a position in the future being said, oh, but you told me to do that, and now I'm stuck with this. So we leave it to the investors to decide what is the most advantageous investment program, the way they want to proceed, security mechanism that they want to have. We will analyze them all. Did you have high wall? Did you have a security service 24 hours? Are they armed? They're not armed. If they're armed, are they trained by United Nations, following certain United Nations protocol and some certain things like that? So we do impose them part of the environmental social safeguards. But we will not impose it ourselves. Once it's there, we will deal with it, but we will not recommend. But if it's there, we do look at it as risk mitigant in many cases and can improve the risk profile of the project itself. So the country may be higher risk, but the project itself is a lower risk because of services that is being provided by outside companies to that project.
Got it. Thank you.
Thank you.
Awesome. Thank you so much, Nabil. We appreciate it. Thank you, ladies and gentlemen, for showing up today, and I will speak with you later.